Shakti, and hello everyone. We as usual discussing different companies and company performance and showing how our platform can help you to understand what is going on within the company. Today this is just fabulous, outstanding, great, amazing topic. We are talking about Berkshire share portfolio.
Hey Natalia, yeah, sounds exciting. So, yeah, the idea was to check the top stocks that Warren Buffett owns in his stock portfolio and see if those stocks are a good buy now or if they're overvalued. Because the current market conditions are pretty hot and all the stocks are highly valued. Maybe we can pick one or two stocks from that list which are still undervalued and approved by Buffett, right? So that's the intention. And it's also exciting because I want to see how much Buffett makes in dividends out of those stocks.
Who's top one in his portfolio?
Apple, as always. So it's been a while since he got into Apple, and Apple has been doing pretty well since he bought. And then it's currently overvalued, but he has trimmed down his Apple positions quite a bit.
Warren is buying a company and the company straight away starts before performing good.
He bought United Health, and that is one of the companies that we show as an undervalued company due to the recent crash. And Warren Buffett approved it. So the process that we use is actually working. If not, they wouldn't invest that much money. And when I last checked, he had invested $1.5 billion in United Health. So that's Warren Buffett approved, right?
This time I was quicker than Buffett. I got United Health
Before him.
just couple of weeks before he got it.
I mean, he might have got it earlier, but sometimes by the time the filings are reported, it might be 2 weeks. But we'll assume that you did it before him. Okay.
Well, I did it with the help of Stocks Dojo.
In our app, the top company or featured company is Apple. So that's Berkshire's top holding. And they have 22% of their portfolio in Apple. And I see $67 billion invested in Apple as per the last filing last month. The overall portfolio is worth $303 billion, and Apple is at the top. I usually go and check the justified market price and figure out how much the company has to grow in the next 5 years to justify the current market price. Now, if Apple grows at 15% for the next 5 years with a target return of 8%, which is average return that we expect from any stock, then you see that the fair value estimate we have is 226, which is very close to the 239 that's shown on the screen. And if you want to get really close to the number, we can play with our estimator tool here, and that'll update the numbers to 236. So it's like 15 to 16% growth expected in the next 5 years. But the recent revenue growth was just 2%. The free cash flow has grown by 9%, which is good news. But still, it's not matching the expected 15% growth over the next 5 years. So at this moment, Apple is a good buy if you believe that the company is going to grow at 15%. Also, they pay a dividend, which is very small. It's like 0.43%. But then, if you do the math, Buffett has invested 67 billion in this company, right? So now 0.43% is actually close to 300 million. So from his perspective, that's big money, right? When we look at it, it might seem pretty small, but it depends on how much you have invested. 100 million just from dividends from Apple.
By the way, I just want to mention how cool is this design right now. I really like it, especially with target return and company growth. Really tempting to play with this estimator and check different scenarios and see how would the return change. Well, I think that Apple is not innovating that much and not growing that much. As an Apple user, I do like the existing products that they have, but everything related to recent trends, AI, is not that great. I hate Siri. I'm sorry, but it is dumb all the time. Competitors are really strong at the moment. Still, I do believe in Apple, but I'm not very confident in buying stocks right now. It's personal, my opinion.
So my bullish thesis is the services. In the revenue column, you see services revenue has been growing while the others have not been doing really well. With the rise in AI, I believe Apple will be in a position to implement a lot of AI features soon. Right, that's my belief because they have the
Yeah.
funding to do that and they have smart people working there. They can collaborate with other AI providers and get you a lot of services.
Yeah.
That revenue is expected to grow rapidly, and maybe they won't be dependent on their hardware that much as they do today 5 years down the line also, right? So that's the bullish case for Apple, and the brand value is very strong. So that's one reason probably Buffett still holds 22% of Apple.
Yeah, you are right. You are right probably here. It's just quite expensive and yeah, and the expectations on the company is really high. So
Yeah,
really high.
yeah. I mean, it's a safe bet for now. If you, when the probability of Apple going bankrupt is very low, your returns might be low, but I think people still invest in Apple because it's one of the safest place to invest money. We'll have time. Will answer our questions. We'll have to wait and see.
Yeah.
Now, moving forward, right? So, what is the next one?
Wait. Next one is American Express. Man, I do have it as well.
Yes. So that's the second top holding, and looking at American Express, I'll just go here. Justify market price. What I see is all they need is 2% growth in the next 5 years to justify their current stock price. Now that is awesome, right? But is
Yeah.
American Express growing at 2%? Yes, of course, the revenue is growing. But I see the free cash flow is dropping a bit. It is also a bank situation. Sometimes in banking, I've noticed that free cash flow is not always green, and there are various other reasons behind it. But overall, the company is growing in terms of revenue. Their valuation looks decent, and that's one reason why you own it, I assume. And also, they have some dividends, and it's almost one. It's growing at 11% over the last 5 years, and almost 11% over the last 10 years. So dividend growth is awesome, even though the yield is low. Again, Buffett owns almost $50 billion of Amex, which means even 1% is 500 million in cash coming in just like that. Who cares if the stock goes up or down?
I'm just happy and I hope that nothing bad will happen with the company and
Okay.
it will keep growing. I do use their services, they're fabulous. I'm flying sometimes for free because of American Express. I do have their stocks and use our app to analyze the company. So this is how I selected that.
Right. But one warning, right? If you look at the history, now Amex in 2007 was trading at 46. The great financial crisis occurred.
Yep.
It dropped to 10. So sometimes financial services are at high risk during financial crises. You should be willing to take that hit during those times. But since then, it's been awesome. From $9, it has gone up to almost, oh my God, that's like 30 times.
I'm alright to take risk.
Awesome. Oh, and while we do it, I want to show this, right? In our potentially undervalued tickers, I have United Health. That's what I was talking about earlier. And it's a second listing here, and it is still undervalued. If I can justify the market price, all it needs to grow by is 1% to justify the market price. Okay. So going back to the portfolio,
Wow.
Bank of America. Buffett owns $30 billion of Bank of America, and we can quickly search how that is doing. I am still a customer of Bank of America, even though I'm here now in Australia. Let's justify the market price. 6% growth. Okay, it's not out of the ordinary, but again, they're not growing at 6%. So let's look at the defensive. Now, defensive is I've preset the values to 3%, which means to get 8% growth, they have to grow at least at 3%. And that's what they're doing now in the recent year. It's pretty close, 45, 44, and 49. Yeah, it's not bad. It's not extremely overpriced.
Yeah.
And
Tell me, when Warren has bought Bank of America, do you know the story?
yeah, somewhere around the financial crisis in 2008 or 9, I think he invested a lot of money into Bank of America because that's a good question. Because if you go back and see the chart of what happened to this company, I think it dropped by 90%. Yeah, it was 35 and it went to $4, right? So there was a huge crash for Bank of America, and I think around that time Buffett saw the opportunity. He made a deal with them to buy more shares, and now he owns 30 billion of that stock. Not only that, he also owns. He has a stake of 8%, 8.2% in the company. So Buffett technically owns 8.2% of Bank of America as a whole. So that's how big the investment has turned out to be.
Yeah.
And same with Amex. And Buffett owns 22% of Amex. Now, going back to Bank of America and their dividends at 2%, and it's growing at a good clip over the last 5 years and also 10 years. They stopped paying their dividends during the crisis, but they resumed it in 2014,
Yeah.
and they've been paying well since then. So again, if you go by the math, 30 billion and 2%, how much is it? 600 million order, right? So we already saw 300 million from Apple, 500 from Amex. Now we have 600 from Bank of America. The numbers are piling up, right? And now, and he doesn't care about the stock price at this moment because who cares? We're getting so much money. Now, next is Coke. Same story. Coke is again, I think Buffett invested in Coke a long time ago, sometime in 1988 or so. And
Yeah.
if you look at the fair valuation, Coke is always unfairly valued because it's expecting a growth of 20% to
Yeah.
get 8% returns. But again, people invest in Coke because Coke is not going anywhere at this moment, right? It's been around for 100 years. It might be around for another 100 years. It's the same soft drink, right? And the revenue is low because if you use our defensive strategy, the stock is only worth $25, but it's trading at almost 70. So the only uh, good thing is the dividends, and they pay almost 3%, which is growing steadily. It's not fast like the other companies that we saw. It's like
Yeah.
close to 4% or 5%. But still, how much does Buffett have in this? Like $27 billion in Coke. Now, 3% of that is almost a billion now. Now, add another billion to that list. And then we have, okay, what's your opinion on Coke and Bank of America?
Bank of America should not go anywhere. America is in the name of the bank. So,
If only everybody thinks like that, you could have made a killing by investing it at $4, right?
that's
So
right.
unfortunately, we are all afraid, and the way we think is different from the way Buffett thinks, and that's why I'm trying to use numbers to make decisions rather than what the news is telling me, right? Okay,
Yeah.
so Coke,
I've heard that Coke is not growing, that it is overpriced. The company is too big to disappear. I don't believe that anything will happen in the following couple of decades.
okay, cool. I too feel the same, and that's why I have some Coke in my portfolio. It's always good to have a sip of
A
Coke.
little bit of refreshment.
Yes. And then next one is Chevron.
I
And yeah, so now if you justify Chevron, again, all it needs is 2% growth. But the problem here is they are dependent on the price of oil, right? Now, if the price of oil drops significantly, these assumptions will not work out. But at this moment, the stock is trading at a decent price. And I think they also pay a very good dividend. It's like 4.4%. and it's growing really well at 6% and almost 5% over the last 10 years. And they also own 18 billion of Chevron,
Yeah.
and 4% of 18 billion. Well, I'm not doing the math now, but I'm assuming it's pretty big.
About sustainability
Hmm.
and Chevron being criticized for their core activity.
Yeah, so if you go back to the revenue section, now that is what you say is the news, right? The news will say a lot of things, but the numbers tell you the truth, right? Now, if you look at the numbers, they make $200 billion in revenue, and that's pretty huge. And they have free cash flow of 15 billion at this moment. Now, yes, the company deals with oil, which is always getting a bad negative sentiment in the news. But the truth is, as of today, a lot of activities that we do rely on oil. Yes,
That's
we are working on ways to get rid of that and move to green energy. And Chevron itself has committed a lot of money towards green energy initiatives because that's where they want to be in the future too. Just like ExxonMobil, we discussed a while back. Chevron is in the same boat, and I think they're also trying to move in the same direction. Anyway, nobody knows what the future holds, but we know what Buffett holds. And these are the top five stocks that Buffett is currently holding, and he's making billions of dollars just in dividends from these stocks. So I own a few of these stocks in my portfolio, and we'll in the future discuss the remaining stocks and what are attractive for us, and if there is any opportunity within the Buffett portfolio that we can look at. We'll have a discussion on that in the future.
Thank you, Shakti.
Thank you.
I might bring just a few things related to sustainability. I'm not going to talk too much in details about everything that Berkshire does, but I just want to provide you a few quotes. Buffett has pledged 99% of his wealth to philanthropy, donating over $60 billion so far. Imagine that. Who else is doing that? Then, probably one of the reasons why Buffett and Berkshire are being criticized, that they are not trying to please anyone, and been very careful to not embrace ESG labels too quickly. There is a quote: "We do not want to make promises we can't keep. Our job is to deliver, not to preach." I love it. It's amazing. It's just
Yep.
wonderful. Then, long-term thinking. Buffett is emphasizing durability and resilience of business, often aligning with sustainability principles. Okay, another quote. "Someone's sitting in the shade today because someone planted a tree a long time ago." Some people are keep talking and giving ratings like we are, and some people are just doing the business and actually making the change. I love what they do.
Yep. They're not beating around the bush. They're straight to the facts. I believe they will do well in the future because their intention is to take care of their investors and make sure the investors get the best returns possible. And if the planet is moving towards ESG trend, I believe Berkshire Hathaway and the team will also do whatever is required to change their portfolio or change the ways the companies that they work with do business.
Absolutely.
Yeah, so I see environment score of 58, social is 61, and governance is 68. Pretty good, uh, considering the fact that it's close to 60 or above 60. And I don't see any red flags at this moment. And I do believe that they'll do the right thing going forward if there are some issues today.
Awesome. Thank you, Shakti. Thank you, everyone. And see you soon again. Bye for
Bye.
now.